There was a ton of bad economic data from last week, and finally, the market followed suit, having its worst week since March. But here we are Monday morning, and we've essentially erased all of the losses from last week, on the hopes that we're going to have a successful vaccine and optimism that the country's going to be reopening soon. In this week's video, our team's going to be covering all of the bad economic data from last week, as well as what you should be looking for to see if the market can finally break through the resistance level that we've been struggling at for weeks.
There were two major news stories that came out towards the beginning of the week last week that led the markets lower. And the first was based off of retail sales. Now, retail sales for the month of April, there was a record 16.4% drop. And that's versus the expected about 12% drop for the month. Now, as I mentioned, that was a record at 16.4%, which means that's the worst month that we've ever seen out of retail. The second and most important story was out of the industrials. And in April, there was an 11.2% drop in industrial output. And that also was a record. Now, that was mainly due to factory closures, some declining oil output, and also less power being consumed. Now, it looked like it was actually going to be a much uglier week last week, as the market was down Monday through Wednesday, but this rally actually started last Thursday, so we saw green days out of the S&P 500 last Thursday and Friday. And now, as we're shooting this video, it's Monday morning before lunchtime. The S&P 500 is actually up about 3% now, so it's made up all the losses from last week plus some. Now, numbers-wise last week, the S&P 500 was down over 2% as well as the Dow Jones. NASDAQ was down about 1%. But, as I've said in a couple previous videos, the Russell 2000 has lagged. It's been a little bit of an outlier, and the same thing happened here this week, as it was down over 5% last week. And now the Russell 2000, which again is small mid-cap companies, down over 24% for the year, while the S&P 500 is down about 10%. Foreign and emerging markets also followed suit last week, as foreign market stocks were down around 3%, while emerging markets were down about 2.3%. Now, both foreign and emerging now still down about 20% for the year.
Morning, everybody. Mike Tedeschi with this week's look at the four major indexes as well as oil. Usually make these videos before the open on Monday morning, but because of the size of the move that we've had here overnight, wanted to take a look at the market here while it is actually open. You can see right in here, the NASDAQ made a big gap up, but it is still trading below that major resistance zone, which got put in from the gap down back in February. We really need to see this get back up over that mid 9,040 zone. Now, when we come in here and we take a look at the Russell has made a nice push higher, but it is still trading below that all-important 1350, and actually it is still trading below that major resistance zone that we put in a week or so ago. So still we have a series of lower highs at the moment, and we have a series of lower lows. So what we're really watching is this zone, and then of course that major 1350. If we get back up above that, that would be a good sign. Now we jump in here and we take a look at the Dow. The major resistance zone that we have in at the Dow was from the low that was put in back in June of last year, and you can see that's where we failed a couple of weeks back. Here we are, this nice big gap up here Monday morning, but it's still below that 24,800 level, so we have to continue to watch that. Last but not least, let us take a look at the S&P 500. The S&P 500 here right back into what right now could potentially be a triple top. Really, it's just a major zone of resistance here at 2940. A move back up above that should target the top end of this resistance zone that we saw from last year before we ultimately had that breakout in November. So what happens here at this 2940 level is very, very important. We're going to continue to pay attention. If we get back up above that, again, we're looking for a move back over 3,000. Now, really important, let's take a look in at oil. Now, oil has had a heck of a rally here over the last few sessions, actually over the last couple of weeks, up from $10 a barrel back to the mid-30s. Now, The major resistance zone that we had here in the short term was 27 to 30, and you can see that we've broken back up above that. Now, the major area that we need to pay attention to is this gap zone in here between 35 and 41. If we get back up over 35 and we can get a move back to 41, that would continue to repair this chart and give us the potential for that next move here to the upside. However, this is major resistance from this gap down back in the beginning of March. If we continue to stay underneath of that, we're still at a point where almost every single oil producer is still losing money in the low 30s. So that's what we're watching this week. Take care. See you guys next week.
If you've watched our last couple videos, you know that we're concerned with another trade war beginning with China. And now here we are, right back to how the last trade war began, with the US putting restrictions on the sale of chips and software to China's largest cell phone provider. So just to refresh your memory, the last time this happened, China did retaliate, and then the US retaliated with tariffs, and China responded. And it's pretty easy to project us going down that path versus the Phase 1 trade deal actually being implemented. Now, the next story that we're looking at could have a drastic impact on the market for the months to come, as DataTrek Research is estimating that over 30 companies are on the chopping block to be removed from the S&P 500. And the S&P 500 committee has already said they're not interested in adding in any additional tech names to the S&P 500, as it's already heavily weighted in that sector. And actually, it's now over 25% of the S&P 500. That's the largest we've seen since the dot-com bubble. The big question now is, not only how will the S&P 500 be affected by such a huge rebalance, along with all of the companies that are being removed and being added, but how do the companies that are currently in the S&P 500 that are staying there get affected? Because we do have some companies that are extremely overweight compared to the rest, and a rebalance could change the whole structure of the S&P 500. And lastly, it seems like we're one step closer to another stimulus bill being passed, as the Democrat-led House voted to give every American $1,200, including children. Now, this is different than the last one, as children only received $500. But we don't expect this bill to pass the Republican-led Senate, as this bill also included mail-in voting, which the Republicans will not vote for the November election. Well, it seems like our country is going to be reopened one way or another, as Americans are starting to rebel against their governor's orders to continue the lockdown. So we're going to learn a lot over the next couple weeks and really see what this virus is made of. Stay safe, and if you like this content, make sure you subscribe to our channel.